What's up, family? So in a recent video I showed you guys some day trading. You guys really liked it, had a few questions. Now I don't really want to post content on trading just yet because A, I really want to spend a lot more time making something of myself before I'm in a position to share my own opinions. B, it brought in a lot of know-it-alls and assholes, and that's just kind of annoying to deal with. Like, I'm used to that for fitness because I put fitness out there to be public, but with trading, it's like something I like doing for myself. So when you get people that have never spent any time actually learning trading, talking down about it, or it's just not the thing you want to hear. But for those of you that did want to know, I'll show you some strategy right now. I'm going to show you a charting I did for Microsoft. So here we go. So this is Microsoft, right? And this line right here, 217, this has been major resistance, meaning it's tried to break above it multiple times and it keeps getting rejected. So rejected, it tried, closed with no cigar, rejected, tried, rejected, so on and so forth, right? But then over here, the last few days, we saw some pressure building up here. This actually looks a little bit like a bull flag, but it definitely was forming a nice triangle with a lot of upward pressure. And the way the market's been going, which is bullish, it looked like this was ready to break out bullish and go up. Now I did set an alert here in case it broke apart and went bearish. You don't want to be directionally biased, you want to have a plan for both directions. But in this case, it did manage to break out bullish. So you could have jumped in here if you wanted to get in preemptively for a swing trade. The next day, boom, it shot way up. Now let's look closer in the actual day itself. Here is where it broke out of our triangle. Here is where you could have entered this morning if you missed it last night and you didn't swing it. If you didn't want to jump in here just yet, you actually got a second opportunity where it formed this beautiful bull flag in the form of a wedge. Here's where you would have wanted to enter. This confirms that it's actually breaking out of your wedge, so you're not gambling. If you entered here, it's kind of a gamble, you're guessing. It could break out, it could also fall apart and go down. But if you go here and it retests that high with volume, it's no longer gambling. It's confirming that it's gonna continue going up, and it did. And boom, right up to our price point, right up to that line of resistance, and it finally broke through it right here. Now, a couple of other things that made me optimistic it was gonna go up instead of down is if we zoom out even more, it's filling out this really long-term, couple of month-long pattern right here. And it had just tested near the bottom of it and was in the middle on its way back up. It was in a very healthy spot to go up a little bit more. The RSI was in a very healthy place before it broke out. And the SPY, which is the S&P 500, as well as SPX, which is more of the S&P 500, was also very bullish. And, you know, all tides rise, all ships. So rising tides rise all ships. So yeah, that was pulling everything upward anyway. So that is how I do my TA. I hope you enjoyed that. Just want to show you an example. That was like a beautiful pattern breakout right there. A couple opportunities to enter. I trade options personally, so you don't have to invest as much to make as much. Now, every time I show anything stock related, I get a ton of questions, understandably. And I already told you how I want to hold off on making a whole side channel for that or really sharing a lot of content on that. But I will answer a few of the bare basic big questions for you guys right now. The most popular ones. So the most popular one is most definitely, by far, what platform do I use to trade on? And the answer is Think or Swim. That's Think or Swim, and that is TD Ameritrade's app. And it's on both desktop as well as mobile. And it is, in my opinion, the best platform for charting and indicators. Hands down. Back when I first started trading, I did it on Robinhood like most of us start off doing, and I would actually go over to Thinkorswim where I didn't have any money sitting in it, and I'd do all my charting on Thinkorswim just because they had the best charting, and then I go over to Robinhood and actually execute the trades. That is what I use for trading. However, I do use a few other platforms for different things. I invest as well as trade. So my trading is done over here on Thinkorswim, but I have 3 different accounts that I use for investment. So for an example, I use Vanguard for my Roth IRA. A Roth IRA is basically a retirement account that you put money into. You pay taxes as you put the money into it. But the beauty is when you're 59 and a half years old or older, you can withdraw from it tax-free. So however much that account grows, you don't have to pay income tax on that when you finally withdraw. It's a beautiful thing. And I use Vanguard for that. I have a growth value stock account, which is all the stocks that got really beaten down during the crash, but had a healthy fundamental and had a lot of room to grow. Even if they only made it halfway back up to where they were pre-crash, you'd still be really green if you bought them nice and low. And I did. And that's a lot of the airline stocks and a lot of the cruise stocks. Not all of the airline stocks are cruise stocks because some of those stocks were not healthy to begin with if you looked at the big picture of them. Lastly, I use Robinhood still for my long-term dividend account. So this is an account that I treat just like an IRA. Ideally, in a perfect world, I don't want to ever touch this account besides adding more to it for years and years and years to come. But the benefit is I can withdraw from it if I need to, if I'm ever in a jam. And this one consists of strictly healthy blue chip stocks and ETFs. I love index funds, all of which pay dividends. Every single ETF and stock in there, besides Boeing and Tesla, those are the only two. Every other stock and ETF in there pays a dividend. And actually, I highly recommend Robinhood if you're brand new and you're just trying to get into investments, or maybe even very safe buying and selling. Not crazy day trading like you just saw, but just safe buying and selling / investing. Robinhood's amazing. They've become a meme and they've had a lot of issues in the past, but I've been on them for years and they're great if you're brand new. Looking at Thinkorswim can be overwhelming. It's like staring at the Matrix. It's like reading code if you're not used to trading. It's very overwhelming. Whereas Robinhood is very, very user-friendly when you're brand new. Everything's laid out beautifully. It's so easy to use, and it's free. So I put a link for Robinhood below, guys. If you want to start up your Robinhood account, it's free. And if you use that link, you get a free stock and I get a free stock. And they're usually some cheap, crappy stock. They're like $5 stocks. I usually just sell them anyway, but you do get that free extra stock in there, which is free money. So if you want to start on Robinhood, try that out. I don't have a referral for the other one. I have tried Webull before too. I wasn't in love with it. It's good. Objectively, it's a great platform. Great platform. I just wasn't in love with like the layout and stuff. I couldn't get into it personally. Another common question, do you have to have $25,000 or more in your account to day trade? The answer is no. If you have a margin account, which is what pretty much all accounts start with as a default, if you sign up anywhere, you pretty much are given a margin account. Margin means essentially a loan. And this is why if you ever notice you finish completing a trade, say you buy and sell something, right? The second you sell, that money is right back in your account ready to be traded with again, right? When you actually sell a stock, it usually takes at least a day, if not longer, for that money to clear and get back into your account. What's actually happened in the margin account is your broker is fronting you that money. They're basically loaning you that money. And then once your actual money clears, then you have your real money. That's why as soon as you execute a trade, it'll say you have X amount in your account. But if you were to go to withdraw that, it would say you only have this much to withdraw. The amount of money you just spent in that trade is not available to withdraw yet because it's not yours yet. It's still clearing. They're just giving you money to keep you full for right now so you can continue using it. That's a margin account, and that's what we all pretty much start off with. Those all have pattern day trading rules attached to them. The PDT rule, that is what you're thinking of. The PDT rule means you cannot make more than 3 day trades in a week span, basically. There is a way around this though. You switch your account to a cash account. A cash account has no margin attached to it at all. So the catch is when you complete a trade, at least on Thinkorswim, you have to wait till the next day to have that money back in your account again. This isn't super problematic. You know, if you have $1,000 and you're making small $100 trades, you can day trade 10 times in that day. But of course, you know, if you have $1,000 and you make one trade with $500, which I wouldn't recommend doing, as soon as that trade's done, even if you close it out, say you made money on it, say that $500 stretched into another $1,000, you close it out, you still only have $500 left to trade with for the day. You have to wait till the next day. So that's the only catch, but it's a beautiful thing. You don't have that pattern day trade rule. You can trade as much as you want. When you run out of money, you're done trading for the day. Next day you get to start fresh. Lastly, what do I recommend for resources as far as learning trading goes? Guys, YouTube and Google. I get asked this all the time from people, what do you recommend? Where should I go? Now I understand it's a valid question. If I'm trading already, you want me specifically to tell you great places I recommend. That makes sense. But honestly, it's like, I know for a fact most of you asking this haven't even tried to simply YouTube search how to start trading stocks. I guarantee you haven't even tried looking that up yet. You don't need to pay for any course. Don't pay for any educational course. You'll see me push penny power trading around a lot. That's a different thing. I explain what that is. But yeah, all you need is YouTube and Google and research these things to start off with. 1, how to draw lines of support and resistance. 2, how to draw patterns. 3, how to trade pattern breakouts. And 4, and actually switch this one to first. This would be first. Learn the candles. Learn how candles work. Learn about reversal candles. Just learn candles in general. The 5 minute, the 1 minute, how those all work. Those are your basics. And then paper trade. In paper trade for like a year, everyone says traders lose money, 90% of traders lose money. It's because they don't actually spend the time to educate themselves and practice it. It's a skill. Learning technical analysis is a skill, and then mastering your own emotions and psyche is another skill. It takes even longer. It takes a long time. Paper trade first, which is a simulation account with simulation money that works with the real-time stock market. Paper trade. Learn your strategy, learn your techniques so you're not gambling. Don't start playing with real money until you're consistently making money on a paper account. Then you know you're not gambling anymore. Hope that helped, guys. Find this stuff interesting. I mean, leave feedback in the info box, in the comments below. I'm losing my mind. I've been staring at screens too long. Love you.